Good morning and happy Feel Good Financial Friday on this 14th day of October 2022. I am your host, George Kroustalis, and with me, my co-hosts extraordinaire, Kim Lancial, financial literacy consultant, and Sam Castellan, real estate development and our crypto expert. What a week and what a month so far. We are in fall, being mid-October, so think, baseball playoffs, Broadway hot season. I know Kim's going to be giving us a live look at that here shortly. And also for the stock market, typically the most volatility we encounter all year, historically, has been September and, of course, October, known for its multiple crashes and bear markets and Black Fridays and Black Mondays and everything else. And this week has not disappointed in the volatility sector. It was a week where, as you can see the cover of today's journal, we had core inflation, PPI reported Wednesday morning, CPI reported yesterday morning. And if you were in the camp, as many of us were, hoping for some cooler numbers, to give the Fed a little more flexibility so they would not be forced to raise rates yet again, 75 basis points, or now there's even chatter of a full point at their next meeting. You were disappointed because the numbers came in hot. I see, PPI, which is core, had the highest reading in 40 years. Now, the CPI, consumer price inflation, came in a little lighter. It was not quite 40-year highs, but it was double the expectations. So this sent the equity markets, the stock market, pre-market yesterday, down the Dow, down 500 points. We open at 9:30 in the morning, and before 10 a.m., we turn positive, and we finish up over 800 points on the Dow. So roughly a 4 to 4.5% reversal intraday. Why is that important? Well, they don't happen that often, especially to that degree. It was actually the fourth largest point reversal for the market in history. And by the way, we had one March 23rd. The last time we saw one to this degree was that Monday, March 23rd, 2020. I remember it well because that was the bottom for that cycle. We were off to the races. We shall see. There's a lot of talk this morning between traders. This was a short covering rally. I could go in and talk for hours about what short covering is, but given the scope of our segment here, we will leave that for a future lesson to discuss what short covering means. Anyways, Kim is in the heart of Broadway, it being Broadway season, and is going to give us a host. Sam and I, we touched on it last time, were both at really good friends' weddings last week. So I know some wedding stats came out this week, and Kim's got the lowdown on that. Kim, fill us in on why so many people are getting married.
Why are so many people getting married? It's because of the pandemic. A lot of people had to push off their weddings, and now they're really starting to cram them in. We're looking to have 10 million weddings this year, and that is up a significant amount from years past. So that is actually about a 40-year record high. And, reasons that we speculate is just exactly like what we said before. I know a lot of people are trying to slim down on their weddings because the costs have just gone up astronomically. So it seems like couples are spending, they know 70% of couples know that they're going to be spending a significant more amount of money, even for those smaller weddings. So that's really kind of something to consider. And another thing too, is that people attend those weddings, such as you and Sam, are spending a lot more to go to those weddings. I couldn't believe the numbers of like what people are spending to go to the weddings, but people are not even like turning their nose up or spending $460 up to $500 just to attend a wedding. So that's your average wedding, what people are doing. So it's really important that you kind of understand when you are accepting that invitation to the wedding, how much it might be end up costing you. So Another fun thing that we're talking about is Broadway, right? So here I am in front of the Richard Rodgers Theater here, where the hottest ticket in town is still Hamilton. You were talking about, what it is. A lot of people are going to weddings and are going to the Broadway shows right now. And guess what? It's really hard to get these tickets. I kind of did just a quick look yesterday, just trying to get 2 tickets to Hamilton. There's nothing in the next few days. And if you are going to be getting those tickets, you can look to spend still $500. That's a little bit less than what people were spending when it first came on Broadway, which is up to $1,000 a ticket. Some people were even willing to spend $3,000 a ticket. But that's Broadway for you. So if you want to try to get cheaper tickets, there's a lot of different places that you can do or that you can go to, and maybe even look in the future. So like January, February, September, that's actually called Broadway Week. So Broadway Week actually took place this year, September the 6th until the 26th. So that was like a really pretty good amount of time where people could get actually up to 2 for 1 ticket. So kind of think about that when you're, coming to New York and you want to spend a little bit of money on Broadway. It's definitely going to cost you.
I'm surprised that Hamilton is still the top draw on Broadway, but I guess no surprise.
Definitely
This is the first year since 2019 where you have a regular season.
Exactly.
With full
and
attendance.
Another big draw. Lion King is still a big draw too. Can't get tickets for that. Very hard unless you're willing to pay a lot of money. You can always go. You can always, go and sort of like stand by, and you can maybe try to get tickets later. But a lot of times it's tough to get them.
Sure. All right. Well, listen, thank you for the report from on the ground level. Sam, welcome back from your wedding out west. What do you have for us this week?
Thank you, George. Yeah, so we're going to continue with our conversation on meeting Mr. Money from scratch. And today we're going to talk about like something that we can talk, in the university like for 6 months. But today we're going to try to put in 2 minutes how the monetary system works. And so basically, George, in preparation to next week that we're going to discuss about like what Bitcoin is, we needed to explain a little bit more of like the history of money, right? And so basically what happened in the last century, George, is that after Second World War, where like all the countries basically try to move their money, like their reserves of gold into America, right? Like trying to escape from the Nazi Germany. They all send their reserves in gold to the US. And so basically back then you have like significant events like the 1929 market crash in the US, which created the Federal Reserve. But then after the end of the war, basically in 1944, we had like what we call the Bretton Woods Agreement, in which all the countries came after the Second World War and agreed into creating the monetary system, basically using the dollar as the back for like every other currency in the world. And so that created a parity from $35 per ounce of gold, where the US that were holding all those reserves in gold, we're gonna change every other currency for $35 per ounce of gold. And so every country was happy with that until the 70s, where Charles de Gaulle, who was the first minister from France, said like, well, this is kind of unfair for the US because then the US can just print money. And so we want our gold back. And so that created an alert because many other countries started asking, to the US to have their gold back. And so Nixon needed to remove that parity from the gold and the US and effectively remove the gold standard in 1971. And so that created all this background to what we have now in terms of how the monetary system works, because now we effectively, with what Nixon did, he created the fiat currency system to where we work right now. And so effectively today, we have like every single country having their own currency, but every single country being backed to the dollar and controlled by their central banks. And so that created a need for a decentralized coin that is Bitcoin, in which we will talk about next week, George.
Listen, when you wanted to break down the history of the monetary system in 2 minutes, it was ambitious and you succeeded. Nice overview, because like you said, that could be 2 full semesters in some econ classes. Well, listen, that is all the time we have this morning. Thank you for joining us, and please remember to subscribe and share and get the good word out. Until next time, have a great weekend. Go Yankees. Adios.